Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? How we doing in YouTube? Thanks, Fred. All right, well, good morning, everybody. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. Let's get into it. We had a heck of a reversal yesterday, and then this morning we had early selling, and I'm going to show you some of that because the first trade in the morning was a short, and then and the target was pretty much the low of the day currently, and then we went from there. This is how the auction works. This is how the markets tend to work. They try to figure out what's too high, what's too low, what's just right. And this happens in all time frames or fractals. So on an intraday basis, the market is still doing the same thing when it rotates, and you can go down into any fractal or time frame you want, as long as you can read it. And of course, you have an edge to operate in any specific time frame with trades that you vet. And that's basically trading. It's statistics, it's preparation, it's knowing where your trades might show up, triggering structures, risk management, trade management, targeting, etc. And that's what we focus on in the Trader Lab. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only, though if we do get into real time, we always will discuss it. I have a couple little announcements here for you, too, you might want to take note of. Our lead educator, Bruce, is doing a special webinar. Sorry to cut your head off there, Bruce. Onboarding to Bookmap. And it's going to be a special webinar on how to set up Bookmap, all the bells and whistles, how it works, you need to register for it. It's going to be a weekly onboarding webinar. It's going to be a 30-minute session and all the essentials from installation to placing your first trade. You'll learn Bookmap basics, how to get it set up, connecting to your data source, the add-ons, resources, Q&A, etc. And you can choose a date and time, and then you need to register. So even if you have the digital version, the free version of Bookmap, or if you, no matter what subscription you might have, you might want to attend this so you can get some answers and make the process of integrating Bookmap into your life as easy as possible. So that's that for that. Don't miss out on that. Now, let's take a look at today. Hold on, I got to turn an alert off over here. Okay. Are you guys with me? How are we doing today? If you're in YouTube, please give a like. And let's get going. So, this is the RTH open. We opened just above yesterday's RTH high. If you remember yesterday, pretty nasty, right? And then we closed up on the high. quite a reversal. So that told us that we had a bullish scenario. Now, the other side of the bullish scenario is quite often, and this is something you should be thinking about, or at least study or do some research, and this is what the Trader Lab is about: research, traders coming together to leverage their collective experience, asking the questions, and together leveraging the group to generate some answers. And remember, trading is a very random, the environment of trading is extremely random. It's actually 100% random 100% of the time. There are probabilities of one thing happening over the other, but any iteration, any interaction you have with a participant is in a 100% random environment. You can have a positive probability of one thing happening over the other, but it doesn't mean that 5 or 10 times in a row it won't happen. It's just the nature of randomness. Casinos have figured it out. They know how to operate in randomness. They don't control anything either other than how they play their games. And they extract dollars from the gamblers because their games have an edge that favors them. Well, in trading, it's very much the same kind of business. Extracting an edge that favors you, the trader, and then only interacting with the other participants when your edge shows up. If you're making it up and just seeing rotations and thinking that's trading, it is not, in my opinion. Of course, it's up to you to determine whether or not it works for you. Didn't work for me, doesn't mean it won't work for you. So this is the RTH Open. This is called the Developing Volume Point of Control. Now, for myself, I was looking for a short. Now, unfortunately, it was very hard because I had this, and then it broke away. So when it broke away, I figured that's the end of that, right? Well, this is a variable high volume node. So let's mark it. This is a price that at the moment is too high. And I just go through a process. What I do is kind of simple because I think our nature is to think that if we make it really complex, we're going to find the needle in the haystack that everybody else missed. I'm going to suggest to you that technical indicators have been around almost since sandals were invented. So actually, late 1970s, early 1980s. And I started with technical indicators when they first came into the public space. So early on, Wells Wilder. So I thought that was, the gift. Here it is finally. Okay, let's watch the behavior here. This is your mid and VWAP. This is your variable high volume node. I'm going to keep marking these because what they're telling me is potentially where the valuation is. And early on, there's no volume. So this valuation is going to change. Well, kind of a little slow here today. Let me put this where this belongs. So I'm bracketing the developing value here. And I'm thinking shorts. Now, I started to say that if the market sells off, what does that give us? Well, if we think the market's bullish and we get early sellers, then there's a couple possibilities. Possibilities are that those sellers get absorbed and get squeezed. But we have statistics here in the Trader Lab. We have the ETH low and high as possible targets. We have yesterday's retail price. It's called the naked volume point of control. There are statistics that you can get your hands on in the Trader Lab, and which give you the probabilities of us getting to these targets, which are actually pretty good. In fact, hold on one second here. I got to make an adjustment to something. I see a bunch of lines, which you don't need to be looking at because it's not relevant to where we are at the moment. By the way, if you have questions, please post them. Okay. So one moment. Okay. So right here, we have too high. We have our VWAP. We have our mid. And I'm looking for shorts. VPOC migration, too high. So I seeing the VPOC moving down, values moving lower, I am looking to get short. I remember where I got short. I better look at my chart. Hold on, guys. Was right off the open thing. Where is it? Huh. I'm kind of finding where I got short. Oh, well, that's nice. I got short up here. Shows you what I know. I don't remember where I got. No, sorry, that was ETH. Well, 830. Sorry about this. I got too many trades here on my chart. Okay, this. I got short here, the VWAP to the VPOC for a scale, and then going for ETH low and naked volume point of control. So that's my trade, actually. There it is. And this was the target. Okay. So that was the short from there to there. That's a structured trade in the Trader Lab. Anybody have a question about that short? How are we doing in YouTube? Please get a like. It's helpful. So right here, that's the target. Now, there's a couple possibilities here. We got our ETH low, and we got our naked VPOC. And the VPOC, so you know what it is the highest volume price from yesterday, which means most of the interaction, the fair price, was here. Well, if the market went up from here, is it reasonable to consider that maybe the buyers were here because the market lifted off? I mean, is it possible? Because we closed up near the high of the day yesterday. Is that possible? So if we closed up in here, and the high was not that, it was right up in here. We weren't too far from the high, and this was where the buyers were activated. So that sets up the possibility, and that's the term possibility, that this might be too low. So here's the deal. Right here, target, you're out, or you have a trade management process. All that is up to you. So right here, though, is a buy trigger. And here's the support. So if we're going to look at trigger, let's look at the alignment of the trigger. A trigger is typically created by a reversal structure with volume. And we can look at this. So here's a buyer. Now, right here, you don't know what's going on. At least I don't. You do. Let me know how you know. I know this is my target, so that's my exit. That's all I got to be thinking about. And, from up there to down here is a nice trade. So now, right here, I see the chop. You'll notice there's a chop here, and we broke low. That's resistance. It's high volume right in there. You can be using that. Let me just show it to you. Using structure or the micro auctions, up to you, and you have to vet this. But you could use these little structures once you understand the language of the structure. So the sellers are here, the buyers were here. We have volume there. We have volume here, right there. So it's like break low, resistance. That's resistance. The high volume represents resistance. High volume is here. It's resistance. What's this down here? It's support because it's the highest volume from yesterday. So it sets us up right here for either continue lower or a reversal. So let's watch the structure. We're underneath here. Okay, that was the target. Resistance is up here, and resistance now is here. Let's put a little line here. So I'm having these structures. So too high, resistance, too high, line, going to zero, right? Don't know. Down here, buyers are here. Sellers are in control here. Sellers, break high. Right here is your reversal. Now, high volume down here. Break high, test. So right here, resistance, support, test. If you hold support, and then you come up, if our sellers are now here, if I can come above, then I can buy this, and my stop needs to be either under here or under here, either one. And then what you're trying to do is come outside to the low volume area out here. So you'd be looking to get scaled on the outside edge. It's one way to do it. You don't have to do it that way, but it's any way you want to do it. See the outside edge? That's why it's a scale. Because what we're doing is we're coming outside, and what the market can do is mean revert back to here. So that's why, for me, if I take a long here, I'm looking at the profile to see where the low volume outside edge is of this auction or this distribution. Now, I don't know what it's going to do. That's not my thing. At least I haven't figured that out, so I don't think about what it's going to do. I think of what it might do and where it might do it, which is right here's the low volume node. So I have to scale in front of the low volume node in case we mean revert and come back again, or fall out the bottom. It can do either of those. So let's watch. Notice where we come. Remember, support is here. This is a break high. This is also support, and it pulls back here. This is also a long opportunity. This is your LVN. You need to be scaling. So if you get long here, you got to scale in front of this volume right here. And you see let me show it to you. Now I'm showing you fractals, and the idea of a fractal is to look at this behavior. What you see happening in here, too high, too low, and then a break away from high volume, is the same thing as what we're doing here. This is a break away from high volume. This is a break away from high volume and a return. This is high volume. We broke away, and let's make it a compound item. There's a low volume node right up here. So I get micro high volume is an auction saying too high. The low volume is an outside edge of this distribution up in here. And high volume on the other side in fractals, this is important. It was yesterday's highest volume, and this is my support off of these structures here, micro high volume. It might be confusing, but what I'm doing is I'm operating, as you guys think, in multiple time frames, but they're not time-based. They are rotationally based. So I call them fractals because the clock doesn't determine this. It's the behavior of the participants. And the other thing about the behavior of the participants is the language of the market. When you have this chop going on, it's an auction. The sellers are there, and the buyers are there. Those are the buyers. I break high. The sellers who are sitting over here got thrown under the bus. Now I get my sellers up here. Let's just think outside edge, and my potential is to rotate back here in this time frame down to the high volume, and it's also possible in a fractal to come back to this high volume. Now, I'm hoping this isn't too confusing, because what we're doing here is we're integrating, as you think of them, multiple time frames, but we're actually using different levels and different time frames in order to attempt to get into alignment. Does that make sense? Spruce, I think you're asking me where the trigger is. Well, the trigger is here or right there. So this is the trigger. There's the buyers. This is the pullback. That's resistance. If you got long in any of this, which you might, subject to your plan, you got a scale here. If you don't get long, or even if you are long, your stop is staying under here, and this is another trigger here. And you can see it because we hold support right there, and then we have our sellers are here, but where were our buyers? They're over here. So the sellers are met by the buyers, and you have a micro high volume structure. You have the break high as a trigger, and the test is another entry right here. Hope that answers your question there, Spruce. Any other questions? Put them on. Let's go. So this is a long subject to your skill set. Right here, you can see the buyers took control. This is your support. If your teeth are chattering and you don't want to do anything with this because we're under here, when you get this, I think it's now reasonably evident that we have a buyer in the house, and the pullback here just is the icing on the cake. It's right at that level. Okay, so now you have to get through this. So if you got long here, you got to be scaling, and now you're risk neutral, and now you want to try to ride, ride it. So VWAP, we anticipate mechanical traders at VWAP, they sell it. Now here's some choices for you. We have our developing volume point of control up here. This is the next target. However, we anticipate counter rotation here. Doesn't have to do it, but there are many retail traders who just, mechanical for them. They sell the mid, they sell the VWAP. They have no idea what the condition of the market is. They don't think that way. They just are very myopic. And like everything, some trades work, some don't. No different from us. However, if I can anticipate behavior, I might want to maybe take a scale or exit my trade here. It's all up to your plan. Because it's not about, at least for me, it's not about trying to catch this whole big move. It's about getting nice pieces of it and not sitting through let's assume for a moment that for whatever reason we had sellers and we came all the way back down. It can do anything. So you just cannot assume anything. So let's look at this. VPOC migration. And what that is telling us is right now, this price is too high, so it's resistance. We currently have a long working here, I see. We'll get to that. So, pull back. Where's our support? You can look at these high volume areas or nodes as potential support. What creates them is the chop is at auction, and it's a consolidation. So the high end of the consolidation is there, the low side is over there, and the meat on the bone is pretty much in the middle. So that sets up, this is your support. So resistance is here, support is here. We have a microstructure. You see the high volume jutting out. It is over here. So what you get is too high, too low. Micro high volume is there. So that's your support. This is your resistance in this structure. Break high. Okay. So this is a potential target. There's your pullback to support. And this sets up, subject to your plan, and this is really subject to your plan, either a continuation long to take this out and get to there, or nothing. Or, and I'm going to give you a lot of ors because there's a lot of different things you can do with this, or you're managing your trade with this. What I tend to do is I'm a fan of high volume because of what it represents. High volume represents the chop or the auction. And the chop is really a test of what's a fair price and what's unfair. If this is too low down here from there, then I'm going to reject it. If I pull back to this volume over here and it's too low, I'm going to reject it. If this volume here is too low, I'm going to reject it. If this volume here is too high, I'm going to reject it. If this volume here is too low, I'm going to reject it. If this volume here is too high, I'm going to reject it. If this volume here is too low, I'm going to reject it. So it kind of is a way to narrate what was too low, this. What's too high at the moment, this. Pull back, too low. Where am I trying to get? Here. See it? Watch. Now, we do have another target up here. Actually, a couple items. This is our next target. This is all in the Trader Lab. So we're trying to get over there. And there's a couple structured trades floating around here too. So yesterday's high, what's over yesterday's high? Stops. And what else do we have? ETH high. And what else do we have? This. So this is the target 81-ish. I always say 81-ish because I don't put my targets right on the target. I want to get out a little bit ahead of it. So this is the target for this trade. So those longs, that's where we're trying to go. Now there's more. Now is everybody with me so far? So all you've seen pretty much is a couple of trades. Now that if you're looking for action, in Trader Lab, we're kind of looking for something a little different. Not action. We're looking for structured trades where we can get an alignment. And we have a long, by the way, that fired right when I started the stream. And trying to get a scale on the darn thing. So how we doing? How we doing in YouTube, guys? So let's come back. So this is the target for the long on this trade. For me, that was that. I do know we have the possibility of going higher. We have this target 6,100 potentially out here. So for me, this, by the way, this long, I couldn't help myself. From here to here is a mean reversion trade, and I'm going for this. It's not a trade recommendation. This is a Trader Lab structured trade right here. It's called VWAP to VPOC. It is an alignment, and this is the scale right ahead of this. And then this is the target on this trade. Again, these aren't recommendations. It could do anything. And we don't know if it'll get there, how it'll get there. We don't know anything. There are stops sitting up here, and this is above. I believe that's the right location. So that's it at the moment. But this is how you might consider operating subject to your time frame or fractal. I have found, and it's only a personal thing, that less trading, more range makes more sense. Trying to, and the other part of this is, now there's two trades here. We had a little conversation about this in Trader Lab, and it was very much context specific. One of them is an IB continuation trade, and it sets up at 9:30 Central Time, and that's when the IB high is in. So this is the IB high, I think, right here at 9:30. So then we have something called the IB continuation trade. and that is we break high, and then we pull back, and then it sets up a long. Okay, so this sets up a long here, and this is a Trader Lab structured trade. And like everything, you got to bet all these things for yourself. So when you get the IB continuation trade, you've got to look at the swing. You've got to look at the location. And we also have VPOC migration. So this was a nice little trade here. It didn't quite go, where I was looking for it to go, but that has nothing to do with me. I just take the trades. VPOC migration is supportive. Pull back to the IB is supportive. Don't forget, this was the target. So there's a little bit of conflict here, but I got to take the trade because I have targets up above. So I just take the trade, put a helmet on, and let it go at that. So I know there's micro high volume here. So if I'm getting long in here, I have to be thinking about this as an obstacle. Why? Because my sellers are here. So there's micro high volume. Let me show you. And I'm just giving you an idea of how you might use the auction process as a way for targeting. So when I look at this right here, let's look at it together. You'll see there's high volume right there. My long is actually doing something. Isn't that nice? So the volume is here, there, and there. So if I get long anywhere, I've got to be thinking about that. Okay? So I break out of my IB. It sets up the IB continuation trade. Okay? And this is where the resistance is. So I come back, I get VPOC migration. Now right here is where the long is setting up. Okay? IB and developing volume point of control and VPOC migration. All of these are wonderful things if you're considering a long, at least in the Trader Lab. Because this is suggesting now that the retail price, what the buyers and sellers are willing to do business, is moving higher. So the general idea behind that is that the perception of value is moving higher. And the easy way to think about this is if you go to the store and you go shopping, and the price for your tuna used to be here, and now it's over here. And if you want tuna, you're going to pay higher for it. So at the moment, and this is all dynamic, it changes. This is the fair price for the entire RTH session. And in the microstructure, this is an unfair price because we left it. So you have micro high volume sitting right there. And in the developing daily time frame, the whole thing, this is the fair price. So if I test this fair price, is it reasonable that if I come back, I might test that fair price? So support, resistance. Let's see what happens. See? So long here, scale there, and I scale ahead of it. Because, why? My sellers were here. Now, I don't know, are we just going to blow through these guys? Wouldn't you like to know? Well, I'm still working on that one. Actually, I'm not working on it. I figure somebody else can figure it out. I never could figure it out, so I stopped trying. It only took a couple of years for that. In fact, more than a couple. And this is variable high volume node. This is our current volume point of control. This is our retail price. This is our resistance. This is our long. This is our resistance. This is a scale. So if you get long here because you're immortal and you're not buying this, here you have your sellers. Your buyers are here, but you need to see once you come above these sellers, you got to clear this. So there's always risk and uncertainty in this, so there's really nothing you can do about that. So this is where we're going. Anyway, that's the IB trade. So let's look at this thing. So there's resistance. And right here, I think I'm home free, make a new high. And then bang, falls down. So here's my support. So I'm risk neutral, thinking it's on the gravy train, and back to support. Takes it out. Hasta la vista, thanks for playing. and I got a ticket to the buffet. Now this is called the IBF. It's not in my plan for today. So it is a counter trend mean reversion trade. So for me, not a trade. So it comes back to VWAP and VHVN's down here. Now, in this configuration, we still want to be looking for longs. So, and what do we get here? VWAP. So VWAP, VHVN, and big volatility. So let's see what we have. We have a structured trade called VWAP to VPOC, don't we? And that's the long I just took. We have a sweep here that suggests a rotation up. We have our VWAP, and this is a structured trade in the Trader Lab, and it's called VWAP to VPOC. This is the first target, which we have gotten. And then, this is not a recommendation, I am now back on the trade where I'm looking for this. Same trade, different location. So in it, for context, the context is up. Or the IBF is a counter trend trade in this configuration. We're outside of yesterday's range. So for me, the IBF didn't qualify. I considered it counter trend. So I find that for developing traders, it makes more sense to trade with the trend, not counter trend. Until you're a profitable trader trading with the dominant side, you should not, in my opinion, be fading and taking counter trend trades. Only because you may not survive the counter trend trading because you may find yourself trading everywhere. And the idea of the business of trading is discipline and waiting for trades that have an edge. In a counter trend configuration, when we're outside of yesterday's range and the market is short and we had a big blowout yesterday, I think the short side offers a bit of more risk than might be appropriate. But that's something you have to vet. So, my objective here is to help you understand market mechanics, how it works, why it does what it does. And if a trader is not profitable, this is not the place to start. The place to start is alignment with the trend, because that gives you your edge is better, I think, you might consider trading with the dominant side as opposed to fading the dominant side and only looking to take stops out. Because this is basically what we're doing here. This mean reversion trade or counter trend trade is blow out the stops. 500 stops there. We get all kinds of stops getting tossed. So when the stops are coming out, there's 500, there's thousands, there's just a lot of stops coming out. We want to use that for continuation longs. I hope that makes sense. Does that make sense, guys? How we doing in YouTube? Please give a like. I see Craig showed up for a visit. Hey, Craig, thanks for stopping by. How we doing in YouTube? If you have some questions, post them. Also, please hit the like. Give us the stream some support. Lets me know that you guys are getting something out of this. These are structured trades. They're available to everyone in the Bookmap Discard Trader Lab. If you're interested in, there's 60 PDFs of these trades. You can download them. Also, a library of webinars on this process. You can learn it if you're inclined. Like everything, you have to vet it. And the Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. And you can all visit Trader Lab if you're so inclined. This is Trader Lab. This is the chat. 24 hours, 7 days a week. There's no cost. We get all kinds of stuff going on in here. Discussions, conversations, interactions, debates, and leverage. We have our senior trader has over 50 years. By the way, this is a trader posted this, and this is actually what we're going for in the current trade. So this was posted, I'm not sure what time. Let me see if I can take a look. Oh, there it is. 10:11 a.m., you know. So there's just a lot of great stuff in here, guys. So it's up to you, but you're all invited. I also want to show you the library of webinars, if I can find this here. And I mean, the long is doing its thing. So here, the primer webinar gives you a high-level overview of what this is all about. It's about an hour long, over 31,000 views. Are you a trader or gambler? Day trading, why most traders using indicators fail. Are you trapped in trader groundhog day? That's when you're tweaking and tuning and waking up in the same place. I did that probably for about 7 years, I think. High volatility reports, how to trade them, how you integrate multiple time frames, trading gaps, advanced user, and then psychology, and a lot more. All this is available. There's a link in the bottom of YouTube, and there's no cost for this. So I think my mother used to say, free is good. So this was the last long. Okay? Trader Lab structured trade. There to there, and now that's a target, not a trade recommendation. Do you guys have any questions? You could learn this. Yeah, CC Chris, yeah, come to the Bookmap Discord Trader Lab. Use the link. You can get an explanation on the custom note columns and all these other things. This is where I keep track of the higher time frame levels. I put them in manually because everything changes. This is a high volume level that we gapped under on yesterday. So all these levels are still open. This one, this is the next one above. So it's kind of a sequential process. We have a gap here. There's going to be stops here. So I'm looking for a continued squeeze. Now, those aren't recommendations. That's what I'm looking for. As far as these levels, these are cloud notes. They come off my Investor RT, which is my higher time frame platform, and they're exported into Bookmap. Very nice. This is manual. I put these on the chart to line up with key levels so I don't get myopic. It's one of my weaknesses. I can miss something because I can get very focused here reading the order flow in the microstructure, like right there, and just not see it. So I found if I did this, at least for me, kind of stuck out. So it was helpful. So that's the only reason I did it. And then I'm also manually drawing in these high volume structures. So, and I move these around. So I'm doing a lot of stuff here to try to isolate structure. It's just the way I read the market. So like here's a micro structure right there. You see the high volume? Well, right now, if I can stay above it, it is support. If I come under it, I can rotate down to here. So this here is an auction. So I'm just going to put a little line on there so we can watch it together. And I'm going to open it up so you can see microstructure. So when you're learning to understand how the market works, now I don't use any indicators. All an indicator is a translator. There's nothing wrong with them. But can you tell what's happening right here with your indicator? I don't know if you can. To me, they're conflicting and backwards looking, so I don't use them. I use this because I can read this because I understand what creates it. And most of us, as we develop as retail traders, are just looking for indicators to translate. Well, imagine if you could learn to speak the language of the market. So you're not dependent on an indicator. And by being able to understand what's going on here, you can be more timely in your entries and risk management and trade management. This is the retail price. If we can break away from it, then this is too low. and we can continue on up towards what is too high, maybe. So I can use this little structure in this little compression, which is only a few points. And I know right now, the last place it was too low is right here at that high volume. And I break, and now I chop again. So it's a consolidation. Break high. What's this? A consolidation. What are we trying to do here? Break high. If it doesn't, what am I going to do? I'm going to rotate. Is that useful to know that? Now, I don't know what it's going to do. I suspect it's going to go higher. That's all I can do is suspect because of the condition of the market. And I know there's fuel sitting here, buy stops, and a target. So that's what I got going here. So that's trading in the Trader Lab, and either it works or it doesn't work, Like every trade, the outcome is random. But these have been on my chart since we gapped under them. They were always targets. It's just a matter of how we're going to get. Will we get there? And nobody has the answer. We may get here, but what we don't know is how, if, or when. Remember, 100% random environment. So the job of a trader is not to be passive, unless that's vetted and in your trade plan it says be passive. The job of a trader is to take the trades that have an edge and also have a vetted trade management process that over time gets you more hicks in the hopper than doing nothing or some other process. The thing about the market, it's always random. So that's why when we curve fit something, we can go back and look the last few weeks and go, I would have got this 20-point rotation and this and that. And then you tweak and tune, which is what many retail traders do. And then there's somehow an expectation that next time you'll get it. Well, in between next time, there's a lot of time. And that time can be a lot of losses because you're not responding to the market. You're trying to put the market in a straitjacket and have it behave. Market doesn't operate that way. It's every moment is unique, and the market's job is to try to figure out what's too high, what's too low, which was yesterday's naked volume point of control. This is the same thing on the other side. So we had one here, which we got. So if we're above this, then potentially this is too low. Now we got this. So that's what we got. Now it's how do we get there? Do we get there? And if you are long from down here, what do you do about this? You manage your trade. And if you get taken out of your trade per your plan, you need to be thankful and not be fretting over not getting here if we get there later. Because your plan, it's not about getting everything. It's about your plan. How do traders measure themselves, by the way? It's not P&L. I mean, P&L is the outcome of having a vetted plan. You measure yourself every day by following your plan. And the plan is created one step at a time. You need a checklist to organize a process so it becomes second nature to you. Like, what's the condition of the market? What happened yesterday? Okay. What do I anticipate in the morning? Well, continuation buying or selling. I know, long or short. Well, if I see the selling, then I have statistics below that I can aim for, like the naked volume point of control and the ETH low. So I take the short and I go for that. Once I get down there, then I have to see, do the buyers come in that were back down at the naked volume point of control from yesterday? Are those buyers? Why did that volume happen here? And the low of the day is there. Why? Because there were buyers here and we closed above it. If I visit it and it's too low, I want to get long. Or if I'm short, I want to cover, one or the other. Then the same process is happening here, which is why it was a target, 81.25, and then same process here. So there's no reason in my mind other than the randomness of the market, that we're not going to go here. Though I can't predict it, I do understand how the market works, why it does what it does, and at times attempt to get in alignment with it with structured trades and then manage the trade, and whatever happens, happens. It's not any more complicated than that. I believe if you spend time in Trader Lab, that you can put a plan together if you do the work, and then you've got to learn that this business is not about action, unless you're into that, and then wrong business. It's about planning, anticipating trades, and waiting for the location where the trade might show up, and then looking for triggers, getting risk neutral, managing the trade. Is everybody with me? This is Trader Lab. Yeah, hi, Craig. Any questions, guys? Can you see the rationale? If you understand how the market works, and this is what the auction really is, an auction market theory, it's really removing everything we think the market is and just putting it down onto what its basic function is. The function of the market is to figure out where the outside edges are, where are the extremes, and it does it in all fractals and time frames. So subject to how you trade, I mean, you could be doing a lot of things. All I can say is you can slice this thing down any way you want. I don't want to get advanced here in the sense of there's a lot that can be done, and there's a lot more that you can do, and that's available in Trader Lab. There's that link in the bottom of YouTube. I'm going to mention it because I know a lot of you guys, kind of come in and out and visit. The Trader Lab's been around for several years. It is currently, there's no cost for it. It's a 24-hour, 7-day-a-week community. It's really about building out the business and learning what the business is. Most retail traders have a fantasy of what this is, that somehow you get a computer software package, indicators, right time frames, and have an ATM in the basement. That's not the business. So it's a great fantasy. And that's what a lot of people think. Oh, you're a day trader. Oh, there's so much. You're making a fortune or something. This is just the business. So then if you approach it like a business, you're just going to show up and do your job. You have to learn the job, though. That's what the Trader Lab's for, and you can learn it. And then you make it your own. There's not one way to do something. And I always say in Trader Lab, the traders have to find their groove. In other words, your alignment psychologically. Now here's high volume right here. You see it? And there's resistance. So we have some resistance. Let's see if we come back and check it. So now we have to be thinking about where's support, where's resistance. Let's watch the behavior here. See if you don't see something interesting. Now I can't predict anything, so let's not get carried away. But what is support? Isn't it there? And where's resistance? Isn't it there? Isn't it, if you were now I don't encourage scalping. I used to be a high volume NQ trader back during the dot-com bust. Very exciting. And that was amazing back then. So I just traded NQs. I don't do that anymore, because I kind of like a little bit more, less intensity. As long as I have rotations, I can trade them. This is a potential. Now, let's assume we're in a vacuum here. Like we're not talking about range. We're talking structure. This is a long to there. Now, see the behavior? This is the auction. You're seeing it. So when I say it's a long, it's not a trade I take. What it is it's a trade I understand, because I understand how the market works. I don't know if it's going to stop there, but what I know is there were buyers here because this seller was absorbed. There's the iceberg. And I know over here, the buyers were here because that seller was absorbed. That created this volume, and the buyers took over to there. Now, when I rotate down, I'm just showing the logic. I'm coming back to this, where my buyers took over, and my buyers are also here. That's why that guy's there. These sellers were absorbed. Buyers here, buyers there, break high, buyers here, break high, clueless, break, support. What was sellers are where? Here. Where do I come up? Here. I see my seller. My sellers are here. Buyers are here. I need to break high. I break low. Where's my support? My support is here. Where's my resistance? My sellers took over there. Can you see it? Fred, you're asking me about 80 and 78. I can't think that getting long at 80 or 78. Well, you could. That's a structured trade if you get a trigger and everything. For me, right now, the long was the VWAP to VPOC structured trade, and we're above the IB. And if I can clear this, I got that. And if I can't, then it's trade management. So we know what we know is the buyers are here and we have an outside edge. So support is here and this is an outside edge. The buyers we're in here. So we can fall out here, pick stops and rotate back, or we're going to be holding here and here. Let's see what we do. I have no idea. Not my job. My job is to look at the structure, try to determine, based on order flow in the auction, where support and resistance is, and then act accordingly. What I did want to share with you with this is to show you support resistance. Support resistance. You see the behavior? Support, and maybe resistance. So if I understand this, now here's the real thing about this. Suppose the range from here to here wasn't 2.5, 3 points. It was 8 points, 9 points. Okay, we have a sell sweep here. So we want to see the behavior. And if we come down, we are going to look for, right here, this is important. Can we make a new high now after this? We want to see, can we clear this? Let's watch. Not a trade recommendation. We are bracketed in volume. So we are rotating in volume. And there's stop. The way I always think about this is I know I got support here and I know I have stops under here because retail traders pulled their stops up here and here. So I don't want to be here. I want my stop to be out here because it's easy for the market to just come down into these stops, which are going to be right here. So if it does, I don't want my stop there, right? So I'm going to give it more breathing room. So this needs to get above this. If we can't, we're going to fall out the bottom. Let's watch it. Question, by the way. So Fred, I think I can't really speak to you about that in the sense of 80 or so. Yeah, if it gets to the IB, you might have the IB continuation trade. But right now, I think, if we clear this, the ship has sailed. I'm going for that. So it's not a recommendation. And by the way, if it comes down to 80, it doesn't necessarily mean it's a place to get long either. But for me, I'm going for this. That's my trade. I'm sticking to it. Let's watch the behavior. And these are not trade recommendations. I take stops. You take stops. Casinos pay the gamblers. There's overhead and cost of production. It's not about that. If you need to be right and you're looking for confirmation, you're in the wrong business. See? So this is kind of what I do. I'm just reading the auction. All I'm doing is I'm looking at the behavior and why does the market break from here? There's a passive seller up here. Why did these buyers not get over the sellers? There's a seller here. Why did this market rotate here? There's a seller here, and there's the book. Look at the order. So we got liquidity sitting up here too in the limit order book. That's an obstacle. Now they'll either going to pull or the buyers are going to consume them. Let's see what happens. Now you see the resistance. And I have selling icebergs. So I've got a selling iceberg sitting out here. Everybody knows he's there. He's waving. Hey, I'm over here. Fill me. Or he's putting a cap on the market, and there's the liquidity. So if this market's going to go higher, we're going to have to get through this. Otherwise, rotation. So let's just see what it does. This suggested a rotation up. Now we've got to clear this. I'm seeing sellers here. So what did we have here? We had buyers here. So now we have to see what happens right here, right here. Too high, and this is too low. It stops. So we're just going to hang out. There's nothing else to do with this at the moment. Any questions, guys? Post them. It's a good time to ask a question because we're just sort of sitting on this thing, waiting for this to ferment. Watch the behavior. Order flow, understanding what's happening here and why. Understanding the auction, which is the chassis that the trades are built on, which is really why the market does what it does. It's really the basis of market behavior. It's an auction. And the market has a tendency also to test prices. And that's why the low of the day was a test. It tested the highest volume price from yesterday. There. So that was the target. And all these are in TraderLab. This trade was discussed in TraderLab. And then this sets up a potential reversal. And then to here, to there. See? So that's basically it. Now, if we get above here, there's more. But for me, be very fine if I just get, up here. Considering the long is from VWAP, structured trade. Guys, if you don't know these trades, you can learn them in the TraderLab. This to there. So this is a long, from let's call it the 62, 63 area. And where are we right now? It's over a 20-point trade. This is TraderLab. How many trades do you want to take a day? I don't know. Me? I just want to take the ones that fit my plan, and then I just do what I'm supposed to do. If the range is tighter, I'm going to do the same trades in a tighter range and do exactly the same thing. The only variable I run into, for me, is range. The trades are the same. So if this was sitting here, like we had one here, but since I'm above it, this sets this one up. So I'm going for this. And we never have to get there. Don't forget that. That's, a given. We have an iceberg executing here. So if we can clear him out, or her, then we can continue. Otherwise, we can rotate. This is still our resistance. Notice the behavior. Sellers are here. There's your seller. More icebergs. So we get a lot of iceberg selling here. Now, the fact we see an iceberg is not a reason to do anything, but it is something you want to be conscious of because we got a lot of selling here. And what happens? Do the sellers consume the buyers or do the buyers consume the sellers and then continue? And there's our resistance. Remember, let's just keep the pieces together, narrate together, and not predict anything. We're not in the business of prediction. We're in the business of alignment. And then whatever happens, happens. Think casinos. We don't know what will happen ever at any location. We do see this iceberg, so that's pressure. Everybody knows this iceberg is sitting here. And if the buyers can consume the iceberg and keep going, it's all nice. If we can't get through this, then we're going to counter rotate. Let's just see what happens. Are you guys tracking? Pete, I can't remember. Why VWAP to VPOC? CC? VWAP to VPOC is a structured trade. The market went down yesterday. We rejected the high volume area at the low of the day today, so that sets up longs. And then the market is short, and we got outside of yesterday's range. The shorts were in the morning. So the first trade I had was a short, and then after that, long. So I don't have to take a lot of trades. If I'm going to get more active and get scalpy, that's not really what I do in the Trader Lab. That's just something I might do subject to the condition of the market and other parts of my plan. But for Trader Lab, the idea of the Trader Lab is to help traders develop and understand the business and then build out trade plans so they can actually operate a business. But there was no short after the test. So the first trade was shorts, and then it's just been longs. You can trade inside this. I mean, if somebody is highly skilled, they could be selling this, buying. I mean, they could be doing anything they want to do. Me, I wouldn't do it because it's too much work and my risk for what? I'm one of those guys who says, well, if I'm going to risk 3 points, I want to make 30 points or 20 points, whatever it is. When I say I want the potential. I don't know what's going to happen. But I'm not going to get long here because I know that's a problem right there. But I can read it, and that's what you've been seeing me do here. I'm reading the auction. Now, I know this is my support here, and I know I can come under here and pick stops. Remember, if you're following the stream, we've been talking about that. And I don't know how far it's going to go. That's not my job because I can't know. I do know that under here, this is an outside edge, and that I want to try to stay above this area. Let me see where this came from. Kind of losing it here a little bit. Here. Notice the support. So I can read this. Doesn't mean I can predict it. Let's differentiate. I can read it. And because I can read it, if this fits my plan, I can actually execute here because it's support based on the auction. So if it's support, and I remember I got to clear resistance, which is here. So if I can clear this iceberg out, and he's hanging out, so he wants to trade. So we're just sort of fiddling around here. If we only come down here, so I have seller here, and I have buyer there. This seller was absorbed. Now you don't know it. Here you don't know it absorbed until there. I'm above the seller. I'm above the sellers here. The buyers are there. The buyers are there. What I read into this is that buyers perceive this as a deal. They bought this seller's inventory. We came down again, and the buyers that were here still thought it was a good deal, and now we're above. That gives me potential to come back to resistance. That's all it does for me. But I can read that. Now, if I want, and I don't want here because my trade was down at VWAP many, many points ago, if I want, and if this was at a different place, it would be a long trigger because that's what this is, and you're looking to go, wherever you're trying to go. But this is support right now. So we'll see. Remember, resistance, support, and then support. The buyers were here, so they now are getting run over. The sellers are still up here. Okay, let's watch this. Alan is asking me why I didn't wait for stops under the VWAP. I just read it, I don't, the thing about the market is, it puts, if there's stops under the VWAP or the mid, it's going to be better because you want those guys out. However, here's the sellers, here's the VWAP, here's the triggering structure. Here's the high. Let's come back here and look at this. I'm getting a question about why did I, because lots of times it's, how far down is this thing going to go, Well, I got high volume right here. And so what happened here was I got my sellers, and I don't know where it's going. Right here, my buyers above my seller. That's a trigger. Okay. So let's just put a little, trying to get this here. Here you go. So this is where the volume is, and I get my buyers. I can't get in here. See it? That's the entry. If you can't get long here, now some of us can, and some of us can't. This is another way to operate. Now we know there's resistance here, and that's why you see that. And then we get our resistance up here, and then we get our rotation. So right here is the entry, Alan. If you weren't able to execute here, and this takes more developed skill, look what you have. You have your VWAP, you have liquidity, you have some icebergs, and you got stops out. So the stops come out, and for me, it would be a long up in here, stop under here, or a long here. Pretty much the same place, stop under here. And then you're going back to VPOC. For the scale, or your scale, before, whatever your plan is. Alan, I hope that answers the question for you on the long. So you had 2 shots at it. Still, notice the resistance. Notice the support. Now, this is important to hold. Otherwise, we can, come back to the IB and who knows. But you can kind of see how I can identify where areas of potential behavior. I can't do anything more than that. I know what might happen. And I know now in this volume right there, I have some support right in here. Now it's either going to hold it or we're going to fail. I do have a problem here. This is resistance. This guy's still sitting in the book. Let's see what happens. So now I have support. I have my other support here. So I got this as support. This is my new microstructure. Break high, pull back, test it. So I have a test here, sweep. I have a test here, microstructure against this little structure. So I have support, micro support, next fractal down, resistance, and then hopefully out the top or wherever. Are you guys tracking? Barry's asking in YouTube, thanks for the question. By the way, CC, I hope I answered your question about when did it stop being short. It was because of the test down below near the low of the day. Barry, what's the difference between the VPOC and VWAP? Why does it seem VPOC is given more weight? Well, they both are similar in some ways. The point of control or developing point of control is the highest volume in the current developing time frame, which is wherever it is. It's up here someplace. Oh, there it is, down there. And the naked volume points of control are previous points of control that are left naked or they haven't been tested since we left the area. So that's what that is. A VWAP is the average price, if you will, between buyers and sellers, where the average is between them. They're similar in a lot of ways, but they're not the same. They're just two different measurements. For me, the VWAP has its place, and I use both of them somewhat differently, but they're manifestations of the same content. It's just a little different. The average buyers and sellers, the VWAP, who's above is the seller, who's below is the buyer. The naked volume, the volume point of control is just the highest volume. If I return to a volume point of control and it's the high volume, I can use it like I would a VWAP. And if the volume point of control is above the VWAP and an uptrend, then it sets up VWAP, the VPOC structured trade. You're basically using two different volume-based pieces. They're separate measurements, but they have alignment in what they suggest. Average buyer is under here, and the highest volume is here. If I'm above this, in other words, if this is where the average buyer is below here, volume-wise, if I come back to it, and I got my average buyers under here, and the highest retail price is above me in an uptrend, I can buy this to come back and check this. They are like brother and sister. They are very related. They operate a bit differently, but they are related. Now, for me, VWAPs are a piece. It's not my primary input, but other traders put more emphasis on VWAPs. And it doesn't matter how you get to, what you can relate to in this. But you got to understand market mechanics before you can start going off into other things, in my opinion. Because the Trader Lab is about helping traders understand the business and building a chassis to operate on, which is what the profile is all about. Then it's market mechanics, how the market works. By the way, why is the market going up? It's not too complicated. Well, first of all, it went down and it blew out the longs and it brings in new shorts. That's what happened yesterday. And then what happened to the shorts yesterday? They got squeezed out. What happened to the morning sellers that we had? The longs from the weak longs from yesterday got taken out on the move down this morning, and we got shorts in the market. So we took out the longs, we got shorts. Now the shorts, if they get squeezed, they become buyers, and we get new longs. That's the condition we're in right now. So what does that do for us? Well, it sets this up, maybe. And in the meantime, you just got to deal with rotations and the rest of it. It's just the joy. Does that make sense? Barry, a developing volume point of control just means it's not fixed. As the volume shifts around, so if we stay up here and there's more volume here eventually, if there is, we have 7,700 contracts here at the volume point of control, and we have about 65 here. While within 200 contracts, this will shift, saying that this is too low. So if we hang out here, and we can rotate in here, that's what's going on here, and we don't fall out, then this will become the new retail price. And then we can continue potentially higher or not. Or it becomes too high and then we come back here. That's what I know. I don't know anything else. I don't need to know anything else. But so Developing volume point of control is because this is developing. If volume shifts, it shifts. So during the day, it is a developing volume point of control. The naked volume points of control are points of control that are left behind at the end of RTH sessions. So they're fixed. They don't go anywhere. Just like the low of the day today had a naked volume point of control from yesterday, it was fixed. Once it's checked, it's no longer a naked volume point of control, which is that. So that will, I'm going to actually leave it on my chart, but typically we just get rid of them. I leave it because I had a reaction here, so it's an important level. So it's not like it's no longer relevant. It is relevant. It was a price check in aisle 3. Do you ever go to the supermarket? Well, the market, financial market, our market, checks prices. It is shopping after all. We are shoppers and we are traders. Well, when you go shopping, you're actually a trader. When you go to supermarket, did you know you were a trader? It's a slow time frame. But if something's on sale, in other words, the price is too low, and you perceive that retail price is up here, but you can get it on sale, you throw 2 in the cart, right? If the price becomes too high, volume will taper off because there's less buyers at the moment for the product. So then we run out of buyers and the volume contracts, and then we can rotate to find our buyers. Also, where the high volume takes place is where's the fair price. This is happening in all fractals and time frames. That's why that is support, that is resistance. You see? Yeah, Rob, if you want the about how my settings, the rest of it, that's all available in the Bookmap Discord Trader Lab community. There's a whole bunch of PDFs and stuff in there on how to, if you want to have your bookmap look like mine. We have these guys pulling. Liquidity marker shows you the ads and the pulls in the limit order book. There's so many cool tools in Bookmap. It's just up to you what you want to see. This is the sweeps. This sweep here suggests a reversal. It's a selling sweep. Those of you who've been following the stream, and we've been talking a lot about sweeps. It's a terrific tool. All this is order flow related. Now, remember, this is our resistance. The line is drawn there, and that's before the iceberg came in, which came in there. So we knew resistance before this iceberg. Doesn't mean anything, but it is resistance. So now what we need to do here to continue on our merry way is to eat up this iceberg, to fill him, and then if we rotate, hold this area, and then continue on the follow the yellow brick road. This is trading in the Trader Lab. It doesn't have to be complicated, guys. It's random. What's so hard for us as humans is fear, the avoidance of risk, and living and dwelling in complete uncertainty 100% of the time. That is really a problem for us because it's our nature. We're wired not to be, we cannot function well in that environment. So when it comes to trading, that's where you run into all these psychological and emotional problems, fear and looking for certainty and more indicators, more confirmation. The word confirmation means you're not going to take risk because it's confirmed. Well, of course, you're always going to take risk. So here's a question for you. If you could take stops with your, quote, confirmation and lagging indicators, would you be better off taking stops, because we're all taking them, with being able to activate here or here with a stop under here versus where? I'm just asking because I don't know. I don't use indicators anymore. It's been so many years I can't remember. But it might be 15, 18 years since I used any indicators. Just saying. So, and that doesn't mean that you can't. It just means you really need to understand Trader Groundhog Day, because you're experiencing Trader Groundhog Day and you probably don't understand why it's happening. And that's why most traders with indicators fail. They don't understand the business they're in, and They think it's a toolbox and a lot of tools. It's not. So you notice, here's what I want to point out. Support, resistance, high volume. So this is our outside edge. This was our outside edge. Breakthrough. Now we have to watch the behavior if we come back here. And remember where we're trying to go. This is the Trader Lab. If you're interested in Trader Lab, first of all, please give a like. It's always nice to be liked. And there's a link in the bottom of YouTube if you're interested in that. And you could come to the Bookmap Discard Trader Lab community. There's no cost. And it's a great community. It's a serious community of like-minded traders who've come together to leverage their collective experience, because there's a lot of work in trading. And the work is about statistics and probabilities and creating edge. Edge is the business of trading isn't just an indicator line crossing and now somehow you're going to be a trader. That's what most think it is, and I'm going to suggest probably not for most. So now we know right here, remember, was an important level. So we want to see if we pull under here, can we continue up? So this is an area to observe. Don't forget to like if you're in YouTube, and don't forget to subscribe if you want to get notifications when I stream. And in the Bookmap Discard Trader Lab community, don't forget, this is the chat. This is what it looks like. You're all invited. There's that library of webinars. Thank you, Ned, for doing all the work on curating this thing. Understanding mental obstacles, balance and mean reversion, opening context alignment, 60 structured trades that I share. Oh, not going to do that. But you can download 60 PDFs of structured trades. You can reverse engineer how to trade gaps, opening trades, a lot of stuff. How your pre-market plan creates a trading edge. That's a 3-part series that is really super. You need to understand that what you can do to differentiate your outcome. Doesn't mean it'll work for you. There's no holy grail. There's no secret sauce. It's really, you got to roll your sleeves up and do the work, and you will be frustrated. It takes time to learn to read a foreign language and interpret it. What I do here in the stream every day is I'm reading language and I'm interpreting a foreign language. You guys are using indicators. You're just letting an indicator translate. That's all fine. However, would it make more sense to actually understand the language so you're the interpreter? Because if you're interpreting the language, you can activate here and there with a risk under here. That makes a big difference. It's called that risk reward thing. And if I can get long in here, and I know my resistance is here. Now, I'm not saying this is a trade I would take, but I'm saying is I would be able to scale here. If I'm waiting for an indicator, where am I getting long? There's my resistance, you see. So anyway, we're going to watch this right here. This is an important level, and we're looking, and it's not a recommendation, to go there. Please give a like. Remember, these streams are available exclusively to Bookmap Discard Trader Lab participants to reverse engineer these trades, the behaviors, screenshots, circle arrows, build out your library, and continue improving your plan. That's the goal of the Trader Lab, and you're all invited if you're visiting in YouTube. Thanks again for visiting the Trader Lab. Don't forget, leave a thumb up. You want to join the Bookmap Discard Trader Lab community, use the link in the bottom of YouTube. There is no cost. And I look forward to seeing you in the Trader Lab. Thanks again, guys. Look forward to seeing you soon. Have a super day. Mind your risk. And if you don't have a plan, maybe it's time to get one. You have a choice. You can either be a gambler or you can actually be the house. It's up to you to choose which side of the financial equation you want to be sitting on. And of course, past performance is never indicative of future results. but I think you have a good opportunity to maybe differentiate your outcome from other retail traders if you get some additional education. So that's my open invitation to you. I look forward to meeting you in the Trader Lab. Have a super day, guys, and thanks again. And don't forget to hit the like on the way out.